All right, the common wisdom which seems to be going around, at least financial markets, when we talk to a lot of players in the system is, well, US growth is looking very good, and India is actually starting to grow once again, and prospects for India looking brighter and brighter. So, I mean, US and India seem to be the beacons of hope for the global economy. I may be exaggerating things, but let's get it from the expert, a man who talks to policymakers, who's very well respected, one of the top economists in the world. Michael Spence is joining me right now. Thanks very much, Mr. Spence, for joining us.
Pleasure.
Did I exaggerate things when I sort of described US and China as, sort of holding up growth for the world?
No, I think that's pretty good analysis. I would say if China, manages a transition as opposed to a trend downward, that it's a big enough economy, 2/3 the size of America. So you've got three pretty important growth poles, and of course India becomes more important as years pass. So these three economies can pull a lot of growth, not only in the global economy, but in other economies that are connected to them. I think that's pretty accurate.
Let's tackle it one by one. Let's talk about the US economy first. What do you think, is going on? Is growth really that strong as everybody's sort of making it out to be?
We had this very, very big fourth quarter. I think, there's a little bit of a tendency to say, oh, well, growth's back, and I don't think you can judge from a quarter. So the American economy's recovered quite well. There was an aggressive program of recapitalizing the banks. We had an extended program of quantitative easing, which means suppressing yields on interest rates, including longer-term ones. We elevated asset prices. The economy's flexible and pretty dynamic, which is a very key element, and adjusted fairly quickly. The household balance sheets, which are badly damaged in the housing situation, are in much better shape. The housing markets are coming back. So I would say, on the whole, the economy is doing quite well. Now, is it at full potential? I don't think so. I think that there's a pattern of underinvestment on the public sector side, which is not all that uncommon when you look across a broad range of countries. And I don't think, without bringing that back to levels that we haven't seen for quite a while, that we'll still be below where we ought to be. The big challenge in America right now, with employment coming down, unemployment coming down, is the income distribution is increasingly highly skewed toward the upper end, and the wealth distribution. The monetary policy had the ancillary effect of exacerbating that, and I think, quite apart from whether or not we can maintain what Americans call a social contract, or Indians would call a pattern of inclusive growth, or Europeans would call social cohesion. It's all roughly the same thing. There's a real issue there, and the middle income people are the ones who tend to spend the money. So it may be that it's also a drag on aggregate demand, or domestic aggregate demand as well.
So, in a way, what you're saying is, looking at the GDP growth numbers,
yeah.
Of course, not for a quarter, it doesn't tell you that much, but even for the full year, for example, hides a lot of detail. For example, wage growth, middle class, of course,
yep.
Getting poorer, relatively speaking, right? Not exactly coming back with a bang at all. Most of the jobs being added, I was reading, are being added in the lower strata income, nurses, janitorial services, and those kind of things. So
a lot down there and some up at the top, or in the top 25.
What does it mean for policy making in the U.S., especially monetary policy, which has kind of driven all of this?
Well, I think monetary policy makers have been very effective, and pretty honest. And they have said, Ben Bernanke said routinely, we don't have the policy instruments to do public sector investment, to fix the educational system, to change the tax policy, to go after, getting the human capital and skills mix, matched better to the rapidly evolving demand side of the labor market. So I think your central banks have either done their job or more than done their job, and it's time for other actors to step up.
I think 2 days back, the ex-governor of the Bank of England came out and said that, more QE will not help. Alan Greenspan said something similar, earlier. What do you make of it? Do you think the Fed is on sort of course to increase interest rates, and are we going to see that in 2015, or eventually they won't? I mean, this will continue.
Well, you can always imagine a shock that's so big that would cause a delay. But on balance, I think the
Fed's on track.
The Fed's on track, and the expectation is that the interest rates, even the short ones, I mean, their quantitative easing is ended in the sense of purchases. That balance sheet will start to wind down slowly unless they start at it again.
Mm-hmm. You think that that's a possibility, that we see QE4?
No. I mean, or it's remote. I mean, it would take a tremendous shock to put them back in that business. So I think, Mervyn and Alan are right. We're on track. This is, the central bank's done what it can. Look, this wasn't an optimal policy response. If you sat down with a white piece of paper,
you wouldn't come up with this.
You wouldn't have the central bank as the sort of only active member, right? You'd have a central bank combined with a certain well-thought-out fiscal policy and a bunch of other sort of what you might call more microeconomic, focused activities. But if you have a government that's badly divided, and there are lots of them in the world, then one set of things gets set aside and the other side does probably more than it would have otherwise and makes a difference. But there's a natural end to that.
Let's come to India. Are you keenly following what's happening with the new government in place? And
I am trying, yeah.
What do you make of all of it? Are we on track for, a big recovery once again, real economy?
I think so. I mean, there's lots of challenges in every country, and India is no exception. I mean, it's a big, complex democracy, so these things have to get through the system. But the Prime Minister is a forceful individual with an impressive track record. The business community is behind him. I'm sure there'll be disappointments because it's just hard to get certain things done. But yes, I expect a real growth acceleration and lots of supporting things. You have an excellent central bank governor.
Yes.
He every once in a while does something controversial with respect to the government, which is a good thing. And looks like inflation's under control. With a bunch of reforms that make business easier to do, that focuses on private sector investment, with some infrastructure investment, with some efforts on the educational side, and so on. I think it's easy to see the scenario as the most likely one that the growth will accelerate on a sustained basis.
We had very high interest rates for a long time. Now the RBI, the central bank, started to ease first rate cut after a long time. And the government, of course, had to sort of contain the fiscal deficit to a large degree. And that's still the focus. You think the focus on the fiscal deficit has been too excessive? Because when we talk to corporates in India, they say that most of the work and orders in specific sectors, industries, is all from the government. The private sector isn't really spending to set up new plants, industries, etc. The government has to, spend at least what they spent last year. They must not shrink. But a lot of economists back home still say that the focus has to be containing the fiscal deficit. What are your thoughts? The budget, the Indian budget for 2015 is just around the corner, and I think that's going to be a focal point.
Yeah, this is a matter of sort of judgment, but basically you can sustain a higher fiscal deficit, especially if an important component of it is focused on investment, if your growth rate gets up, right? Because you don't damage the ratios, and so so I tend to, on the other hand, if you've sort of lost the growth momentum as happened for a 3 or 4 year period there, then fiscal deficits running high, tends to produce significant problems. So if this is where there's reasonable confidence that a fiscal deficit created in part by an investment program that's designed to be complementary to private sector investment, which will drive growth and employment and other things, then there's a justification for it.
But you don't think that should be done now because there's no growth? Growth hasn't come back. It's quite weak. So
no,
you can't run high deficit. Is that what you're saying?
Yeah, I think, if you want to jumpstart growth, then you have to take a bit of a gamble and make the investments, right?
Government investments.
Government investments.
So government has to spend, and that's what you're saying.
Yep.
So then,
you're betting on growth.
Yes. increase public spending, right, on infrastructure,
infrastructure, education, you know, the knowledge and technology base of the economy, the tangible and intangible assets that public sectors tend to create, that create an attractive investment environment for entrepreneurs, for domestic investors, for corporates, for foreign investors.
So in the budget, for example, if the government were to say we're not going to be sort of bound by fiscal deficit and what the markets want, but we're going to spend because this is what we want to do, and explain it very well.
Yeah.
This is where we're going to spend, and this is the rationale.
Yeah.
Do you think it's going to be accepted and well received by the financial markets, for example?
Well, there might be a bit of a negative reaction, but sometimes you have to put up with that. You know, I mean, the policymakers around the government, you know, have to develop a growth strategy, and if it's too timid, then you basically, it's a chicken and egg problem. You don't get the crucial things done that are part of the... Now, you know, a conservative would say, yeah, sure, get the investment level up and cut something somewhere else. And that's when the art, you know, or the judgment comes in. You have to you'd have to take a guess as to whether or not, you know, you've gone over a boundary in terms of gambling on the growth. And the political side says it's very difficult to cut, you know, social services and in other areas. So you know, it's never easy. But it seems to me, given the mood of optimism, the willingness to invest, provided appropriate, you know, policy reforms are taken and public sector investment is elevated, this strikes me as a time that you'd sort of err on the high side rather than be too conservative.
Just one last thing. The big push from India here, and I'm sure you must have noticed as well, is Make in India. Come Make in India. I mean, set up businesses and invest in India. That's the message to foreign investors. Back home, there's been a bit of a debate. The government seems to be wanting to go the China way. I mean, a weaker currency, cheap labor, and you know what China did say 30 years back. Dr. Raghuram Rajan, the central bank governor, recently said, well, that's not the way to go because the situation has changed. You can't do that. You have to do something else. Make in India is very well, but you can't follow what China did, you know, 3 decades back. Where do you stand? I mean, this entire Make in India push, the manufacturing push, because at the end of the day, that's the only sector which can create jobs, and that's the big focus for this government.
Yeah, I have felt for some time that this was a neglected area in the Indian sort of economic mix that was driving growth. It's not that the trade and services and the technology sectors, you know, underperformed. They were wonderful and contributed an enormous amount to Indian growth. But when you have that many people to employ, my attitude is it's more like a business attitude. What you do is, to the extent your resources permit, you create as many options as you can, and then let the investors decide which ones to exercise. And you interact with them. Right. So there is one thing looming on the horizon which is really quite important for India and for all developing countries, and that's directly relevant to whether the Asian model in a suitably modified form will continue to work. And that has to do with digital technology. And in particular, you know, we're at a kind of inflection point with respect to the capacity of things like robots and 3D printing to shift things that used to be very labor intensive into a digitally capital intensive sort of mode. Once that shift happens, you know, then it accelerates because the cost structures of those technologies are such that the costs go down like a shot. Now, in China, it's a no-brainer because the incomes are up at a level where they got to make the shift anyway, right? Yes. So their, quote, manufacturing sector won't be much of an employment engine, and it'll probably become pretty automated pretty quickly. It's important to understand, when one's thinking their way through this, that once technologies in various, I mean, think of it as a portfolio, but in various places become digital and they become mobile, right? So that doesn't, then if you ask yourself, so where's it going to go? The answer is it's going to go toward the final market, wherever it is. It'll go toward the Indian final market, so that portion you'll get. Okay. It'll go toward the Chinese final market. It'll go toward, you know, the European and American final market, because unlike labor, you know, it was mobile. It is mobile. Now, the question, I think the operative question is how fast is it going to happen, okay? So if you believe it's going to happen really quickly, then you don't want to focus the infrastructure investment on enabling a lot of labor-intensive, process-oriented
yes.
assembly to find that that's not the game anymore. And so a lot of serious sort of thought, and nobody has the answer to this, but I've never seen anything that was that had big potential happen literally overnight. So I guess if I were called on to make a judgment about this, I would say we're probably some years off before this happens, but one would want to keep a keen eye on it. And I also think that when you think about the portfolio of public sector investments, anticipating this shift and focusing some of that investment on human capital that functions in a complementary service mode to this kind of technology would be wise. So I guess what I would think is it's a kind of hybrid strategy at this stage. It's not a no-brainer.
It's not here or there, but it's somewhere.
It's somewhere. You got to find a way to walk down the middle.
Tricky one. Thanks very much. Thank you very much.
Enjoyed
Thanks
it.
for joining us.
I appreciate it.